Question 5, multiple choice. Again, most of this is theory. I don't think there's any workings here, so let's check them. Which one of the following options represent the net worth of the entity at any specific point in time? That's the statement of net worth is owner's equity is A minus L. Okay, that's how you calculate net worth. Right, so when looking at a specific point in time, you'd be looking at the financial position. Okay, C. C, financial position. It's assets minus liabilities. That's the focus. The key there is specific point in time. That's the only statement that's at a point in time. It's statement of financial position at this point, at that point, at that point. If they said over time, then it's over a period. Okay. 2. When does a long-term liability become a current liability? When it becomes repayable within 12 months. E. 3. Checks which have been issued in payment to suppliers which have not yet been presented to the bank for payment on the date that the bank reconciliation is prepared are referred to as, it will be reconciling items, because checks which have been issued in payment to suppliers but not have been presented to the bank for payment, outstanding checks. A. 4. Match the ledger account income received advance to one of the categories. Income received advance, if I receive income received in advance, I have an obligation. An obligation is viewed as an asset. If it's a resource, a liability, if it's a obligation. Yeah. So asset if it's prepaid or accrued income, liability if it's accrued expenses or income received in advance. So E, current liability, yes. Okay, and then the last one. Match the ledger account electricity deposit. Okay, a deposit is something that I've paid that I'm going to get back. So it'll be a current asset. D. Okay, deposits are receivable back in the future. Okay, it's a deposit. You could actually look at it as a non-current, non-current asset would be tangible. Yeah, so electricity deposit I would classify more as being current. But again, depending. So
I said it's expenditure because it's electricity.
Electricity is an expenditure, not the deposit. Okay, it's a deposit. Deposit is it's a resource. So depending on the time frame, okay, deposits could be long term, could be non-current, if greater than 12 months. Okay, so it's a bit of a toss-up between non-current asset or current asset. Okay, because it's electricity, I would go more current asset rather than non-current. Okay, because it's not really a tangible asset like property, plant, and equipment. Okay, and the deposit would be quite small, depending. Okay, right, but definitely not an expense though, because electricity is an expense, but because this is a deposit, it's an asset. Okay. Right, and those are the 5 questions, right?
Yeah.
Great.